Well, hello and welcome to the Magellan Sustainable Update for Q4 2021. My name's Matthew Webb and I'm here with Dom Giuliano, the Portfolio Manager for Strategy. Dom, thanks for joining us today. Can you start off with telling us a little bit about if there are any renewable energy companies that are starting to take your interest?
Yeah, good afternoon, Matt. Look, there aren't actually any 100% renewable energy generation companies in the universe, but you really need to understand that there's a bunch of companies in our universe and portfolio which are actually really important in moving the world to becoming carbon neutral. So, for example, there's transmission and distribution utilities that are in the portfolio. You've got Eversource, which is based in the US. You've got Red Eléctrica in Spain. And these companies are actually investing billions of dollars and billions of euros of CapEx in their networks to be able to connect their networks to renewable energy generation. So they're an essential part of this solution. And nicely, they are regulated networks. What that actually means is that they have earnings stability from all of that CapEx, which is actually a great outcome for investors. So there's stability of returns. And then if you look at other parts of the portfolio, there's companies which are huge consumers of electricity. And you think about the tech companies like Microsoft, or Alphabet, or Amazon, or Meta, the new name for Facebook. These companies' data centers consume huge amounts of electricity, and all of these companies actually have very aggressive targets in place to only use renewable electricity. And they're also actually placing a lot of pressure on the huge supply networks to get their suppliers to also meet the requirements of the Paris Accord. You know, for example, Matt, Microsoft is actually working with their manufacturers of Surface Pros to ensure that that supply chain gets to carbon neutral as soon as possible. So I think that's an important thing for investors to understand, that you can actually drive significant change to net zero, to meeting the Paris Accord through a range of different solutions and a number of companies that are actually in our universe and in our portfolio.
Thanks, Dom. I think you raise a really important point. Could you elaborate a bit more on some of the names in the portfolio and the efforts they're making in reducing their environmental footprint?
Yeah, sure. I'll talk about three, and they're all operating in different sectors, just to give you a flavour for some of the different solutions that are out there and some of the targets. So I already mentioned Eversource, you know, the US utility. They actually happen to be the only US utility targeting carbon neutrality by 2030. That's a really aggressive target for a utility. And they're continuing to connect renewables to their grid. They're developing green generation opportunities. And they're also enabling the decarbonisation of transportation where they operate in the United States. I mean, it's one thing to buy an electric vehicle, but where does the energy to recharge it come from, right? So Eversource is providing an end-to-end solution there, which is super important. And then if you think about a company like Amazon, we're all familiar with them. You know, they're aiming for 100% renewable energy by 2025 and 50% of all of their shipments to be net zero by 2030. And if you think about the size of that footprint, that's really quite a stunning target. And part of that solution is them actually purchasing 100,000 electric vehicles for their deliveries. And that's super important to think about as well, because that scale of purchase actually means that there's positive externalities to the manufacturing of all of those electric vehicles, driving down the cost of those electric vehicles, and that's a benefit to everyone as well. And Amazon's also got other environmental goals, including 100% of Amazon goods packaging to be 100% recyclable by 2023, and that's also quite a stunning target, and let's hope that they achieve it. And then the last company I'll talk about, which is Nestle. They're targeting 100% renewable electricity by 2025, net zero by 2050. Now, you might ask yourself why there is such a big difference between the renewable electricity goal and the net zero goal. Well, the tricky part for Nestle is that they've got a very large footprint in the agricultural supply chain. You know, if you start thinking about things like dairy and wheat, etc., you know, it's much, much harder to actually reduce the carbon footprint of those sorts of commodities and agricultural inputs. But, you know, they've done a great job in reducing, carbon dioxide footprint and emissions at a product level. So if you look at the product level, they've actually reduced carbon dioxide by 30% per tonne of product since 2010. So they're reducing it not only at the headline level, but at the per unit level, which is really, really cool to see. And then, you start digging into what else they're doing. They have to use a lot of refrigeration in their distribution supply chain, and they're shifting a lot of their refrigerants towards natural refrigerants, which is super important from a greenhouse gas perspective. And then the last thing I'd say for Nestle is, and they do produce a lot of food products, and moving to recyclable goods in food is actually really tricky given the hygiene elements that you've got to think about, but they're actually reducing waste by shifting to recyclable paper packaging across a number of their product lines. If you think about things like Nescafe 3-in-1 or Maggi and Smarties, they're actually investing a lot of money in shifting the packaging on those products towards recyclable paper, which again is fantastic to see.
Thanks, Dom. That's really interesting. I want to pivot a little bit now to the portfolio, and a recent name that you've added is Booking. We obviously all know that best as Booking.com, but it's a fascinating addition. You've held it in the past. You've had Omicron arrive into the world this quarter, but you've added Booking.com. Can you tell us a little bit about what's interesting and why now for that name?
Yeah, sure. Look, Booking, for those not familiar with it, it's an online accommodation and travel booking platform. The primary business is actually in Europe, and that's really important to understand. And that means that they actually have less exposure to the large hotel chains, which do dominate in the US. Whereas in Europe, Booking's primary customers are actually all of those smaller boutique hotels in Europe that we're all familiar with, and they've got a fantastic franchise there. So, why have I bought Booking? Look, from an investment perspective, there's actually a shorter term and a longer term theme at play. And on the shorter term theme, clearly it's around COVID. And we do expect a cyclical bounce out of the depressed accommodation volumes that we're seeing because of COVID. And lately, of course, the Omicron variant. But indeed, I actually entered the stock in early December when pessimism over the impact of Omicron was beginning to weigh on the stock. But we do remain confident that over the next few years, travel numbers will increase as the world continues to learn to live with COVID and the vaccines and the therapies continue to improve. There is a longer term theme to why you should own Booking. They should continue to benefit from long-term secular increases in spending on leisure, travel, experiences, and there continues to be an ongoing shift to online bookings as well. And so we're really confident of achieving quite attractive returns over the next 3 to 5 years out of this investment. The other thing I'll just point out, Matt, is that Booking.com is actually an investment in part of the portfolio's exposure to a post-COVID bounce and also those longer-term secular trends I just mentioned. So if you think about it, I also purchased holdings in Airports Aena, which is the Spain's monopoly airport operator, and also Fraport, so Frankfurt Airport, back in Q3 last year. And they should also benefit from a recovery from COVID, as well as the longer-term secular trends, which I just talked about. Now, look, there'll be bounces up and down, depending on whatever COVID throws at us. But, just getting back to basics, there's a lot of people in Northern Europe who desperately want the sun by summertime, and also a lot of really interesting places to travel to in Europe. And so we've got a good degree of confidence through the cycle and over the longer term in terms of Booking.
Thanks, Dom. I just want to finish that, there's been incredible proliferation of ESG and sustainable investment options in the marketplace. Can you share a little bit, you've been in this space for a long period of time now, can you share a little bit about what investors should be looking for or perhaps should be trying to avoid when they're looking at investments in this space?
Yeah, look, it is a complex area given the proliferation of products and solutions out there. I'll just stick to 3 points, I think, which are really important. The first is just consider the product that you're looking at from a holistic basis. In addition to the sustainable characteristics that you're looking for as an investor, is the product meeting the risk management goals that you're looking for? Are they aiming to provide the investment return objectives that you're looking for as an investor? So think about the totality of what you're buying. Secondly, I think it's really important for investors to think about the investment option, whether the investment option is actually true to label. Are they actually doing the work to understand the sustainability issues for each single company in the portfolio? Think about the issues that I just went through at a name-by-name basis a few moments ago. Or is the investment option, have they opted for like a tick the box approach, where often the ESG boxes being ticked aren't actually material to the company or indeed the end investor? What are you actually buying from a sustainability perspective? And then lastly, is the manager actually engaging and talking with the company about the sustainability issues that are important and influencing the company to achieving those outcomes investors are actually seeking? Are you actually driving change? I'd leave it at those three, Matt.
Thanks, Dom. Very much appreciate your time today.
Thanks, Matt.
And thank you to everybody who took the time to listen in. If this is interesting to you and you feel it will be interesting to others, please feel free to share with friends and colleagues. Thanks again and speak to you soon.